Good afternoon from OANDA here in Singapore. This is our weekly video about certain things that are grabbing my attention in the markets this week. The first one that I should discuss today is the Indian rupee. The Reserve Bank of India announced their latest rate decision today. It was left unchanged at 4% as expected, but what they did announce was a formal start to a quantitative easing program. They're going to buy 1 trillion rupiah worth of government bonds, or about 13.5 billion US dollars over the next quarter. That is the actual formal start to the QE program. They have been quietly buying in the secondary market all of last year. That hasn't been great for the Indian rupee. The Indian rupee, dollar INR has actually risen by over 1% today to 74.295. And in the process, it's actually broken out dollar rupee through the top side of its 200-day moving average at 73.67. Now, India does suffer from a condition called stagflation. That's where prices are going up, but growth is falling, and it has been for quite a while. And that will be exacerbated by the weakness in the banking sector, rising food prices, and rising oil prices, because India is the third largest importer of oil in the world. So it was a negative that the Reserve Bank of India had chosen to leave rates unchanged, although, to be honest, they didn't really have much choice. Combine that with the escalating spread of the next wave of COVID-19 that is sweeping through the country, and the outlook is starting to look a bit grim. And we know from experience that when emerging market banks experience or dabble with quantitative easing, the outcomes are usually quite negative for their currency, even if it does support their stock market. So that's one to watch for the rest of this week. We could see more topside. Turning back to the developed world, overnight we've seen the euro perform extremely well against the US dollar. And in fact, it's up about 1% over the last couple of sessions. What happened overnight was the US dollar weakened as investors left Wall Street behind and went looking for cyclical recovery stories. And what better recovery story is there than Europe if you're looking for undervalued assets at the moment? That saw the euro rise up through a descending wedge at 117.90, as you can see from the chart, and it's actually now testing its 200-day moving average, which is at 118.75. If it closes above there in the next couple of days, we could see the euro actually move higher up back towards 120. Bear in mind that the Europe overnight announced that by the end of July, any European basically who wanted to be vaccinated would be vaccinated, and so that has been another positive tailwind. Whether it lasts, well, the jury's out on that, but in the short term, euro does look positive. If we look at the euro sterling chart, we can see that it's performed very well against the pound as well. It's risen 150 points over the last few sessions, but it is now very close to quite strong resistance at 86.50, and I think it will find it quite challenging to move much higher than that, bearing in mind that Britain is doing very, very well with its vaccination program. Looking at oil, we can see on the Brent Crude chart, we've had a very, very choppy few sessions over the last week. OPEC Plus decided to increase production for the next month in May by about 1 million barrels a day, and Saudi Arabia is actually looking to unwind its unilateral cut as well. This is a bit of a reach by OPEC, to be honest, and they're taking their lives in their hands, so to speak, with prices because we see India and European consumption falling due to COVID-19 and production surging again in the United States. What it probably does mean, though, looking at the charts, is that we're in for for more choppy trading. And my feeling is that Brent will continue to bounce quite aggressively between that $60 and $65 a barrel range over the next couple of weeks until we just see the trajectory of COVID-19 in India and in Europe with a bias towards the downside. And with that, I will wrap things up, and I wish you very well for the rest of the week's trading. Thanks very much for your time, and goodbye.